Hi, thanks, Christina. This is Jan Masaoka. I'm with the California Association of Nonprofits, and my job here is really just kind of to welcome you for a minute. I think what most of you know is that insurance is most nonprofits' third biggest expense, after personnel first, and then rent, and then insurance. So it's really worth our all paying attention to managing that expense and making the best use of it. And it's also, like even though it's the third biggest expense, if you have an accident or a lawsuit, it becomes like the single most important thing you've bought all year. So that's why I'm very happy to be able to introduce today's webinar. So just a quick word about the nonprofit community here in California. All of us are among about 72,000 nonprofits in California, of which about 50,000 are all volunteer organizations and 22,000 have paid staff. And in fact, California's nonprofits produce about 15% of the state gross domestic product. And 1 in every 16 workers who works in California is actually working at a nonprofit organization. So with such kind of a big economic force and so many employees, that's why insurance becomes so important. And back in 1984, when this organization was founded, I wasn't there then. I'm actually the 5th executive director. But at that time, nonprofits were redlined out of insurance a great deal. That situation's gotten a lot better, but it still is an issue for lots of particular kinds of organizations. And so Cal Nonprofits at that time also went ahead and, in addition to forming the association, which is a policy advocate for nonprofits, also started Cal Nonprofits Insurance, and which is a broker that provides insurance, not just health and dental, but also general liability, directors and officers, cyber liability, all that kind of thing. And Colleen Loznich is with us today. She's the CEO of Cal Nonprofits Insurance, and so she's going to tell you more about that. Here's just a few of the programs that we have at Cal Nonprofits, and please feel free to, if you want me to call you directly, type in your name and telephone number in the Q&A, and after this webinar is over, if you have any questions about any of these programs, I'll be happy to give you a call. All right, so Colleen, take it away.
Welcome to Insurance 101. This is a huge topic. We have about 45 minutes to allow for some questions at the end. So we will be moving very quickly. These we really are only going to be able to skim the basics of insurance. I will try to get to everyone's questions. I will be stopping frequently for questions and then again at the end. And if we don't get an answer to your question during the webinar, we will get you an answer after the webinar. So the first thing is, what is insurance? And insurance is protection for your organization. It is, your organization has risk, and insurance is one method for transferring that risk away from your organization. It doesn't get rid of the risk, but it can help reduce the overall cost. Risk is expensive, and you need a way to finance it, and that's essentially what happens with insurance. Risk is that there is a chance of loss. These losses can be injuries, they can be damage to your property, theft of your property, they can be theft of funds. That's a very common thing. They can be a lawsuit for discrimination from either clients or employees. So there's a lot of risk that nonprofits take on, and this isn't even including the risks that they would have if they're dealing with a vulnerable population. There's a lot of methods for handling risk. One is you can avoid it. You could just not do the thing that is causing you to have that risk. You can reduce or mitigate it, put up safety railings or wet floor signs, making sure you have too deep supervision when you have vulnerable populations. Those are all methods for reducing or mitigating the risks that you face. The third is to transfer that risk, and that's where insurance comes in. You're transferring your risks to the insurance company for premium. So if you need to, for contractual reasons or some other reasons, carry $1 million worth of liability insurance, you can either have $1 million in the bank, or you can transfer that risk to the insurance company and pay a little bit of premium for that. Or you can just accept it and go on. There's lots of organizations that have risky exposures that they just accept. And sometimes you can't insure them. There are things that are not insurable or are so expensive to insure you would choose not to insure. So in that case, you have to either make a conscious decision to accept that risk, or you would do one of the other methods for handling that risk, such as avoiding or reducing the risk that you face. Insurance is a contract. The policy is a contract. That contract is between your organization, or you for your individual insurance, your individual policies, is between you and that insurance company. It's really important to note that your broker is not a party to that contract. It's between you and the insurance company. Your broker will help negotiate it, will help educate you, will educate the underwriters, and broker the deal between you and the insurance company, but they are not a party to the contract. We're going to talk a little bit about standard and non-standard contracts. Standard contracts are the wording issued through the insurance standards office. Those policies have pretty standard wordings. Those are typically what you'll find on your admitted policies through the state that allows you to, the state reviews those policy forms. And then there's non-standard lines where each company's policy is going to be worded differently. Any of those non-standard policies where each company is worded differently, you really have to compare those policy forms to see if you're getting similar coverage. Some of the most common lines that are non-standard are listed here: directors and officers insurance, professional liability lines, sexual abuse, and cyber. Property and casualty. Property and casualty coverage is for your stuff, it's for your people. So we're just going to, go over the major types of property and casualty insurance. Number one is your general liability insurance, and this is covering you for damages from third parties, either bodily injury or property damage that you caused to someone else. It usually includes personal injury, advertising injury, medical payments, and employee benefits liability. Employee benefits liability is for failure to properly administer your benefits program. It is not employment practices liability, which we'll talk about in a moment. And the reason I say it usually includes personal injury and advertising injury is that occasionally a carrier will exclude that coverage if you have too high of a risk. So, for example, if you are an organization that goes out and campaigns hard against some other organization or company where you could be accused of defamation, perhaps they'll exclude personal injury. So we don't see it real often in nonprofits, but there are some nonprofits where the carrier will provide their general liability. So if somebody slips and falls or you injure somebody, you have coverage for that, but they won't provide the personal injury. Professional liability is also sometimes called errors and omissions insurance. Most nonprofits, unless they have specific medical or legal professional, will fall under an umbrella of social service professional liability or nonprofit professional liability. Professional liability covers your failure to provide or errors in providing professional services. Does not necessarily mean bodily injury. In fact, usually their bodily injury is excluded because that's covered by your general liability. Your professional liability is you made a mistake. You may not have injured somebody, but you failed to provide the services you said you were going to provide. The most common nonprofit exposures in professional liability are counseling services, teachers in schools, advice, different types of advice lines. Of course, healthcare is the largest nonprofit, but that's, will fall under medical professional. Sexual and or physical abuse and molestation can also be called, sometimes it's just called improper sexual conduct. The wording on this coverage is always changing. Sometimes this is a separate policy with separate limits. Often it's an endorsement to the general liability policy. Your general liability policy will exclude intentional acts. And so in order to have coverage for the organization for something that your employee may do, improper conduct, you have to add back this coverage specifically. Otherwise, the insurance company could decline to cover that bodily injury because it's intentional. It isn't intentional on the part of the organization, but it's intentional on the part of your employees. And as an organization, your general liability covers actions of your employees when they're working for you, and volunteers too. Automobile liability. Almost every nonprofit has exposure to automobile liability, if only in the hired and non-owned auto areas. If you do not own any autos, the rest of these coverages, most of them aren't going to apply to you. But if you have employees or volunteers who are driving on behalf of your organization, you should make sure that you have hired and non-owned auto liability coverage. Auto liabilities for your autos. That's for the autos that your organization owns or leases. Hired auto is for the autos that you hire short-term. Leases are covered under your regular auto liability. Non-owned auto covers the organization over the employees or volunteers' vehicle if they're driving on behalf of your organization. Medical payments is kind of a no-fault small limit for injuries that people sustain in and around the vehicles. Physical damage is comprehensive and collision. This is damage to the vehicles, theft, hitting a bird, those types of damages. Uninsured and underinsured motorist coverage is coverage for the passengers and the driver if the person who caused the accident is either completely uninsured or doesn't have enough insurance. California state requirements for carrying insurance are very low: $15,000 per person, $30,000 per accident bodily injury, and $5,000 of property damage. So it's pretty common that uninsured and underinsured motorist coverages come into play in California. Rental reimbursement and towing coverages can be available depending on the types of vehicles that you have insured on your policy. But there's two endorsements, one of which is listed here, that you should make sure to have on your policy. One is volunteers as insured, and the other is employees as insured. And that is to be able to pick up the hired and non-owned auto when your volunteers and your employees are driving on behalf of your organization, because your auto policy for your organization is going to be in the name of the organization. So you want those employees and volunteers covered too. Drive other car coverage isn't written very commonly. That is where an organization provides a vehicle usually to their executive director or some other executive staff, and that person has no other personal auto insurance. So this kind of gives them extension of coverage when they're driving another vehicle, not the one that's provided to them by the organization. Directors and officers liability insurance is also called nonprofit management liability. And this is the protection for the board and other officers, committees, and directors of the organization. The three coverages that every nonprofit likely needs, but we see them without it all the time, even if they have no employees, are general liability, hired and non-owned auto liability, and directors and officers liability. Some people think that they have coverage under their homeowner's policy for when they're serving as a director on a nonprofit board. And while that may be true depending on your policy, I wouldn't rely on it personally. I would make sure any organization I was volunteering for had adequate directors and officers liability coverage. now these policies, the ones that are called nonprofit management liability policies, can include a lot of other lines of coverage on them. Employment practices liability, which is coverage for discrimination and lawsuits that can come come to you if you discriminate against an employee, or even an accusation of discrimination. They can sometimes include wage and hour coverage, which would be coverage for improperly paying your employees and not following the wage and hour laws. They can also sometimes include cyber liability and fiduciary liability on the management liability policies. So sometimes these can be packaged up with some of the other less common lines. Workers' compensation. This is the fourth leg of the stool if you have employees. You are required by law to carry workers' compensation insurance. There is no exceptions for employees. If you cannot exclude employees, such as if you think they're owners or they're an executive, so they're on the board of directors and they're the only employee, you still are required to provide workers' compensation coverage to them. It is required by law to protect employees from injury, illness, or death while on the job. You can sometimes include coverage for volunteers under workers' compensation if you have a lot of volunteers. You will, if the carrier is willing to provide that coverage, you will be paying a salary equivalency. So if you have volunteers who are clearing a trail, for example, you may have to say we have 100 hours at $15 an hour, and that's the payroll they would use to calculate the premium to cover those employees under workers' compensation. There are no exemptions or exclusions for employees of nonprofits. Property coverages can be written as part of your general liability under a package policy, or they can be written separately depending on the situation. Property coverages include coverage for your stuff, your buildings, if you own a building, your contents, your office equipment, your business income. Some people are under the mistaken impression that nonprofits don't have income because they're nonprofits, and that is not true. If you would lose your funding or not be able to serve your people, you could have a business income loss. And so that is easily insurable and often thrown in at some small limit with your property policy. Inland marine, the most weirdly named coverage available, inland marine, which is basically mobile property. Mobile property includes laptops, can be cameras, it could be sets and costumes. It could be any number of items could be covered under an inland marine policy. Crime, employee dishonesty, fraud. I've seen some of the largest claims I've seen paid for a nonprofit were employee dishonesty related and paid under the crime coverage. Equipment breakdown. Equipment breakdown dovetails into your coverage, and equipment breakdown covers, it used to be called boiler and machinery, but basically it's an electrical failure or some other failure that might cause spoilage. It might cause your computers to get blown out from a surge. So that would be equipment breakdown. Often that's endorsed onto a property policy. And then the other coverage for property is catastrophe, earthquake, flood. We're not in wind-prone areas in California that typically would have hurricane coverage, but you can have excess wind coverage. I have a couple of questions, I think, Deshauna.
Yes, I was just going to interrupt you. So we had a couple questions about workers' comp, and Andrea wants to know if you're suggesting that board members should be covered under workers' comp.
Board members would only be covered under workers' comp if they're employees. They have to still fit the definition of an employee unless you have coverage for volunteers. So board members wouldn't be excluded, but unless they're fit the definition of employee, they wouldn't really need to be included and pay a salary for.
Okay, we have one other question. This is a little bit more specific, but it's asking if what workers' compensation insurance needs to be in place to cover a geographical diverse workforce.
Okay, I think that you're referring to maybe workers in other states. Workers' compensation and the laws around workers' compensation are not specific to California. I mean, each state has their own rules and each state has their own requirements for how much the employee gets paid. But you may have to have insurance policies for different states. So you may, for example, need to have a policy for, say you have employees in Louisiana, you may need to have a separate policy if your insurance carrier can't write those other states on the same policy. So it just depends on the state and who the carrier is. Some carriers are only licensed in one state and other carriers are licensed in all states. So they can write a multi-state policy.
Okay, just one more question from Maria. She wants to know if workers' comp covers contracted workers such as veterinarians who are not actually on payroll.
So that's going to depend on your contract and how you're covering them. When you have independent contractors, they are supposed to have their own insurance. And typically, if they don't have their own insurance, when you go through your workers' comp audit, they're going to add their payroll into your audit, and you're going to end up having to pay for them. So, you know, similar to a subcontractor and a contractor, you need to make sure they have coverage. If they're completely independent, then you may want to cover them under your workers' comp. So then if you cover it ahead of time or if it gets discovered during audit, one way or the other, you usually end up paying for it.
Great. Thank you, Colleen. I think we're done with questions for now.
Okay. Some other coverages that aren't as common, but some of them probably should be. Cyber liability. Cyber liability can cover a multitude of things, not just a breach of potentially a breach of personally identifying information or personal health information if your organization has that, but also donor information, credit cards. Each state has notification requirements. Notification can be very, very expensive. And the statistics on organizations going out of business after a breach are awful. I mean, it's like 60% of small organizations that have a breach are no longer able to operate after that breach because they're crippled by the cost. And so there are ways to protect your organization. Cyber is a terrible name for this coverage. It really should be called security breach coverage or security liability, because it's protection for your organization. A lot of those policies can also include some first-party coverages, such as if you get hit by ransomware or a virus that locks up your whole organization's computer system. It can provide some help with getting that back, but that is a non-standard coverage, and so the coverages and what's included on each policy is different. Some of them have like packages that include, so you know, just minimal coverage or basic coverage, and they throw them onto your package policy for a very little premium. Those are not going to be a full security liability coverage or cyber coverage. They're going to be, you know, more like a free throw-in kind of coverage. And if you get it for free, it's probably not going to cover very much. Participant accident insurance. This is coverage for participants in your programs, participants in your special event, students, if you are dealing with kids, after school programs, you can purchase accident insurance. What this does is give you a little buffer between, you know, just paying for somebody's medical bills and then Otherwise, they may end up having to sue you and get coverage under your general liability, which would be a lot more costly to the organization. Business travel accident insurance is something we see very rarely, but is something some organizations may want to think about. And this is coverage for the organization's employees if they're traveling on business. And this gives an extra accidental death and dismemberment coverage. It also typically will throw in like concierge services for if flights are canceled. It can include repatriation expenses if somebody gets injured overseas. So that business travel accident policy typically isn't very expensive, but it can really protect the organization. Foreign liability, most general liability policies are going to have a territory of the United States and its territories. So if you have employees or operations in other countries, you need to get a separate foreign liability policy. There's also special event insurance. Some policies will include events up to a certain amount. Some policies don't. And so you may need to get separate special event insurance. Excess and umbrella liabilities, both of those are giving you additional limits over the other policies. So typical general liability policy will be $1 million for each occurrence and $3 million aggregate. And an excess policy could give another $5 million or $10 million of coverage above that policy. The big difference between an excess and an umbrella policy is an excess follows the forms that are under it, and those forms need to be listed on the policy. And it will follow the coverages with very few separate exclusions. An umbrella policy is its own complete coverage form and may have additional exclusions that override the ones on the underlying policy, meaning the umbrella would not follow those policy forms for coverage. But an umbrella policy can also drop down if there's a coverage missing that should have been there and provide some primary liability coverage. And then bonds. If you're required to have a bond, you can write bonds separately. Some crime policies can include, for example, if you need an ERISA bond, your crime policy can include an ERISA bond endorsement. But if you need specific performance bonds, that's a whole nother line of coverage in addition to your regular policies. Any questions, Deshauna?
Yes, we have one from Anthony. He wants to know if Cal Nonprofits Insurance Services provides insurance services for for-profit organizations.
Yes, we do. We're a full service brokerage. 99% of our clients are nonprofits because we're a subsidiary of the association, but it's not totally exclusive that we could not insure a for-profit organization.
Okay. And one more question from, I think this is, I can't say their full name because I think it's an abbreviation, but what other types of insurance will cover special events, such as an auto club 501c7?
So clubs typically have special policies that will include their special events. If you know you have special events coming up, it's always best to put them out there to the underwriter when you're doing your application to see if they can be included on your blanket general liability policy. And if they can't be covered by your blanket general liability policy, then you may need to get a special event policy. If it's like a motorcycle ride or a classic car, poker run or something like that where cars are involved, there's a whole lot of requirements that underwriters will typically put on you, and they'll want to see the contracts for your event. So that's always helpful to have. Anytime somebody needs to be named as additional insured to your policy or receive a certificate that you have coverage, you should provide those contractual requirements to your insurance broker because often people sign contracts without really knowing what they are agreeing to. And you could be in violation of your contract if you're not meeting the requirements. So your insurance broker is not an attorney. They're not going to review your contract to make sure, you know, that that it's to your benefit, but they will be making sure that your coverage will meet your contractual requirements, you know, the requirements that are in that contract.
Great. Thank you, Colleen.
Okay, so let's move into employee benefits. This is the coverage for your people. You know, if you have employees and you are at a position in your, you know, organization's life that you're ready to provide coverages to your employees, we'll talk about what some of those coverages are. Typically, group coverages can be provided for a variety of different types of policies: medical, dental and vision coverage, life insurance, short and long-term disability policies, alternative healthcare such as acupuncture and chiropractic. You could provide flexible spending, health savings account, qualified small employer health reimbursement accounts, employee assistance programs, and wellness programs. These are all types of coverage that can be provided on a group basis rather than an individual basis. The ACA is still in effect, and there are still current ACA mandates. The big question is employer paid health insurance mandatory? And if you have less than 50 employees, sorry, there is no requirement that you provide health insurance. Employers with 100 or more full-time equivalent, FTE full-time equivalent, will face penalties, and those started taking effect in 2015 if you don't provide coverage. And employers with 50 to 99 employees, the penalties started to take effect in 2016. What is that employer mandate penalty? If you have 50 or more employees, and even one of your employees goes to the exchange, unless you can prove that you're offering qualifying and affordable coverage, and those are defined terms by the ACA, to all full-time employees working 30 or more hours and their children, you'll pay a penalty. Which penalty you pay depends on whether you're offering coverage, what percentage of your full-time employees and their dependents you offer it to, and whether it's qualifying affordable coverage according to the definitions. But the penalty is either $2,260 for every full-time employee you have, or $3,390 for each full-time employee getting the subsidy. The IRS started sending out the first letters that I had seen last year, late last year, for the 2016 year. For employers, they're just, the IRS is kind of reconciling now those 1094, 1095 notices with employees that went and got and claimed the tax subsidy. And now they're going back to those employers and having them respond to these requests. And if you can prove that you offered coverage and that it was, you know, qualifying and affordable, you won't have a penalty. But if you can't prove that, then you will have a penalty. So if you get a notice from the IRS, don't ignore it. Group versus individual coverage. The benefits of offering an employer-sponsored health insurance include you can use it as a recruiting and a retention tool. Often, even small employers offer benefits. So, you know, to be competitive in the marketplace to recruit employees, you may need to have it. Employer plans still have better coverage for a lower cost than individual plans, even if you're a small organization paying on the per employee rate based on that employee's age. And there's some tax-free benefits to employees for having that coverage. It is important to note that if you think it's better to just pay the employee for their individual health plan, you could face a separate tax for doing it that way. To avoid that tax or penalty, you can set up a qualified small employer health reimbursement account for those employees and then reimburse them for their individual health plans through that account. So It's something you have to give to all the employees, but you would do the reimbursement through this Qualified Small Employer Health Reimbursement Account, which has no acronym that's easy to pronounce. Employer-sponsored plans, when you have an employer-sponsored plan, you need to make sure you're following ERISA, state, and ACA laws, or you could have penalties. You need to make sure that you provide appropriate documentation to all plan enrollees and new hires, including summaries of benefits and coverage, typically provided by your health plan carrier. Your summary plan description that describes the rights and benefits under your specific benefit plans, and you're responsible for the creation of that. Many brokers will help you with the creation of your SPD. Provide notice of exchange and mandatory ERISA notices such as women's health rights, right to designate providers. There's a whole packet of required forms that you need to give to employees at enrollment and when they're newly hired. There are new employee waiting period restrictions. You can't exceed 90 days for a waiting period any longer. And Medicare Part D notices, you must give your Medicare eligible participants notification whether your group plan meets the prescription drug coverage minimums for Medicare Part D. Here at Cal Nonprofits Insurance and the association, we have several exclusive programs, including a dental and vision trust called the Nonprofit Benefits Trust, the Healthway Trust of California, the Unemployment Services Trust. Nonprofits have the option of opting out of the unemployment insurance program in the state if they meet certain requirements, and we partner with a trust called the Unemployment Services Trust to provide that coverage. We have some exclusive programs through Unum for group life, voluntary life, disability programs. We have exclusive Landmark Alternative Health, which is chiropractic and acupuncture care. And we have online enrollment and HR software. So I don't see any questions, so I'm going to go ahead and, oh, here we go. I think we do have a question.
Yes. Andrea said we are a 24-hour, 7-day-a-week, 365-day open facility. Some of the part-time employees who are scheduled to work less than 30 hours a week may, for even extended periods of time, put in, say, 30 to 36 hours per week, but not all the time. Are they considered full-time for insurance purposes?
I actually am not a health, an employee benefits specialist, so I do not know the exact answer to this, but we can get that back to her after the call.
Perfect. I think that's all the questions for now.
Okay. So just a few buying tips. Number one, you should choose your broker first. Many people think, well, if I go to multiple brokers, I'll get the best price. Well, that's not necessarily the case, and you may end up not being able to work with the broker you want. Your broker should be a consultant, a teacher, an advisor to you. They should be your partner in what you're doing, because your broker represents you. They don't. If you're dealing with a broker, if you're dealing with a captive agent, they represent the company, but an independent agent works for you. So I would say you should choose a broker who understands and knows nonprofits, because they will have access to all the markets that insure nonprofits. And they should help you understand your insurance and your insurance policies. And like I said, you should view them as a resource, a place to get information from. And communicate deadlines to your broker. If you have a certificate requirement or event coming up, do it in plenty of time. You know, often we can't issue certificates for events until the policy's been issued. So if you're getting your policy, you know, a week before your event is happening, until we have that policy, we can't issue any additional insured endorsements you may need to meet your contractual requirements. So communicate deadlines early is always also important. Ask lots of questions. Like I said, your broker should be your consultant. They should be an advisor. Ask lots of questions. Make sure you understand your budget and you communicate your budget. Ask for options. Know what's important to your organization. Every organization has different priorities, and you need to know what's important to your group and be able to communicate that with your broker. And compare coverages. The low price could equal less coverage, like I stated about the throw-in cyber coverage, or a lot of throw-in coverages. They're thrown in. They don't cost a lot of money. They may not give you all the coverage you want. So you may say, oh, I've got cyber coverage, but you may not actually have the cyber coverage that you need for you know, your massive web campaign that you're undertaking. Use resources. There's lots of resources, and we see people not utilizing them as much as they can. Whoever your insurance carriers are, their websites will if they deal with nonprofits, will typically have a lot of resources. They'll have help for controlling losses. They'll have checklists for doing safety inspections. They'll have lots of templates for you to use. They may have on-site loss control if you're a larger organization. We also utilize and are members of the Nonprofit Risk Management Center, and as an affiliate with the Nonprofit Risk Management Center, we have those resources available for clients. You may have access through your broker, but the Nonprofit Risk Management Center also has resources that are available to the general public. You don't have to be an affiliate member to get them. Use your broker as a resource. They should be your #1 resource. And here at Cal Nonprofits Insurance, we now provide access to Think HR, which provides HR, work comp, safety resources, handbook help, a live call line where you can call and ask questions. In fact, the last question on employee benefits, if I didn't know the answer and I didn't have access to an employee benefits specialist, I would go on call the Think HR hotline and ask them that question. And webinars. I know the association puts on lots of webinars. There are a lot of webinars out there that can help you. Insurance carriers put on webinars all the time. Additionally, you'll discover that on their carrier website.
Can I jump in here for a second? This is Jan. I just want to draw people's attention in particular to this Think HR. It's free for all members of California Association of Nonprofits. And, you know, just 2 days ago, I was talking to one of our members, and, you know, one of their employees made this kind of casual remark like, you know, I'm going to sue you. And he was like, what should, you know, how worried should I be? Was this just a casual thing? Is there any steps I should be taking? And so luckily he was a member of ours, and he was able to call Think HR live and talk to a real person and got a real answer. And so, I mean, I think all of us have been in that situation where we just have a simple question and we want to ask it before it gets to the whole crazy legal stage. So I really want to encourage you to use that if you're one of our members. That's it.
Okay.
Is that the end of your slides, Colleen?
Yeah, we got through it even fast. Maybe I talked way too fast this time. I would like to say that we are putting, I know the last time we did this webinar, we had a request for like a next level or how to read an insurance policy. And so I am putting together a Beyond the Basics webinar that will go a little deeper into some contractual liability and really some tips and tricks on what to look out for specifics on policies. So if there's any questions?
No, I think we're done with the questions. We don't have any.
Let me just thanks, Colleen. Let me just make a kind of a closing comment. I really appreciate your taking the time to develop this and go over it with folks. You know, Cal Nonprofits gives a mandate every year to Cal Nonprofits Insurance, and that has 3 components. And the first part is provide quality quality, affordable insurance to nonprofits in California. And that has to override every other part. And so one of the ways in which I think that we see that happening, for example, is Carlene's organization, Cal Nonprofits Insurance, providing insurance to C4s, 501c4s, advocacy organizations, which are not easy to get because many insurers do not understand C4s and the kinds of advocacy work that they do. So I think that, serving our nonprofit community, keeping all of us safe and insured is a way big priority for us compared to profits. And that's one of the things that makes Cal Nonprofits Insurance so special. So please give us a call. Let us know how you think this webinar went. And we'll hope to hear from you. And then one more thing, I guess I should just remind you, you'll get a copy of these slides with the questions and answers. So look for that in your inbox. Thanks. Thanks, everybody.
And my email, oh, sorry.
Go ahead.
My email's on the screen. My email's on the screen. If anybody has any questions, feel free to email me.
Yeah, great. All right. Thanks, everybody. Have a great lunch.